Nvidia earnings are out and the stock is up after hours 5.9%. And these numbers are very, very good, especially for the size of Nvidia. 69% revenue growth during the quarter. I want you to understand how crazy that is, not just from a raw percentage standpoint, but for the size of this company. As a company gets bigger and bigger, it becomes harder and harder to grow revenue. For instance, a company like Apple, best case, is growing at about 4% to 5% in a quarter. So 69% is absolutely insane. And the stock so far is up pretty big in after hours. Now, right now, I'm shooting this video. It is 5 p.m. Eastern Standard Time. The earnings call has not come out. I don't believe the guidance has come out either. So these are big things that could continue to move the stock either in an upward direction or a downward direction, especially if they talk about the impacts of tariffs long term. But so far, ridiculous results. If we look at the actual EPS, 96 cents versus 93 cents, they're not that crazy right there. Revenue, 44 billion over 43 billion. So definitely beat on the top and the bottom line. But the most important thing that we're really seeing here is also the data center division for Nvidia, which is basically one of the most important aspects right now. This includes AI chips as well as AI related parts, and that made up nearly 88% of the company's sales during that quarter. So we talked about how crazy a 69% revenue increase is. Well, about 88% of that came from data related division itself. Now, I no longer have any shares or call options on Nvidia. I'm sitting out of this entirely, and we played this over the past month from down here at about $109 up to this resistance level of $135. And the main reason that I decided to walk away is because of two main reasons. The first was this technical head and shoulders pattern that was playing out, which normally is bearish. Normally, price will come up to $140 resistance, price will reject, and then sell off down to that $90 range. Now, I didn't open up put options. I rarely ever bet against the market unless I'm hedging my fund. But in this case, I just felt that I had made nearly a 20-something% return on my shares. There was no reason for me to go ahead. On my calls. And there was no reason for me to go ahead and just take on more unnecessary risk, especially with earnings. Now, for those of you who have taken our free courses, if you've taken our Options Simplified course, which is meant for beginners, we talk about implied volatility crush and why I normally will not trade options during earnings. If you want to get the access to that link, it will be down in the description. As we move into earnings, when we have implied volatility, or basically an implied move coming into the market, implied volatility will rise. And what that will do to the options market is inflate the price of premiums, meaning that it will be more expensive to buy an option, whether it's a call or a put. But once the volatility is removed, i.e. once earnings actually happens, then IV will drop. And when IV drops, it's going to also pull the price of the premium down. So this is why sometimes you might have traded options going into earnings. And even though it played out the way that you expected, you look at your account the next day and what you thought would be a 300-400% return normally is only an 80 to 90% return. This is why I usually don't trade options in general trade earnings in general, but it's also why I rarely trade options into earnings, because it's just more unnecessary risk. Now that brings us to where we currently are seated right now. As long as nothing sells off going into tomorrow, and more importantly, as long as we don't get any more word on continued trade war, because we did see that reporter push Trump pretty hard today, as long as we don't see anything like that, then this should push to all-time highs. Now, will I be chasing this? Most likely not, at least not at this point. One of my main reasons that I also didn't hold this going into earnings was because the BX trender on the monthly chart, which you can see here, even though we're showing signs of a bottom and it's making a higher low, it's still red. So the last time it was red was back here in 2022, then prior back here in 2018. But every single time that we come out of a red market bias, we are normally followed up by a massive rally in the market. This was a 600% move in 2 years, followed by once again another 500% move in 2 years. So that's what I'm more so waiting for. I'm okay with giving up 5, 10, 15, 20% profits. I want to see that monthly BX turn green or minimally close with a higher low. If that happens at the end of this month, I might look to actually start to take some positions on this, but I really want to see that green close on the monthly bias before I start trading this long, especially before I start trading this aggressively long. Because I'm not worried about a 10 to 20% move, as we stated. I want to play that multi-year expansion like we saw the last two times that this happened. Let me know what you guys think down in the description. Let me know if you ended up trading Nvidia going into the earnings call. And if you want to learn our entire strategy completely for free, no credit card, no BS, no filler, the link to our 12-step masterclass series with all of our free indicators and our step-by-step entry and exit requirements is down in the description. The only thing I ask of you in return is that you respect the process and respect the system that we have created over the past 11 years and take the courses in sequential order. I'll see you next time.